Hey guys, what's up and welcome to a new Tesla update videos. Today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what is happening and what we can expect moving forward. Today's a pretty big day. That's why I'm recording a little bit early today. Still about almost half an hour until the market closes, but I want to be ready for Apple and Amazon earnings coming out after the market closes, which is going to be pretty damn massive, especially Apple, which essentially, like I've said many times, is pretty much an index in itself. It feels like sometimes. Now, with that being said, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor. And of course, if you're interested in hearing my thoughts on Tesla chart and updated charts live throughout the day as the stock is moving, well, the link is down below to my membership section for $2.99 a month. Didn't want to make it expensive or anything like that. But yeah, moving into a Tesla, looking like it'll be closing the day up just over 2%, which will be putting us just shy of $260 per share. I mean, at least as of right now, from what I am seeing. And I don't think it'll get too much more crazy from here. So let's talk about this, right? There's a few things to discuss. So first, we'll start off on the 65-minute chart. So you're going to notice I have a little bit of a different pattern here, right? The pattern we had previously, I believe, was something like this, if I'm not mistaken. I think it was something like this. Yeah, this was the pattern we had previously, right? The ones that just drew, which was like a bear flag or bear pennant, whatever, bear wedge. I always forget the terminologies, but you get the idea, right? We'll just call it bear pennant. Now, the point is the fact that, we came down with the flagpole from earnings all the way down to here, and then we kind of went sideways, consolidated in this bear, pennant, and then we broke down below it, came up, retested it. But the thing that's interesting is the fact that after many unsuccessful re-enters, or I guess successful retests, and then of course getting rejected, right, which kind of happened here. It was kind of happening here for a while, and then this candle over here, you can see we obviously went right into the back into the pennant, right? The fact that this happened made me start thinking about potentially different perspectives. Maybe this isn't truly what's playing out, or maybe there's another alternative perspective. And this is what I propose to my membership section right here. You can see, which is this right here. This is a descending wedge. Now, descending wedges are a bullish structure. And so far, it seems like we're actually breaking out of this one. So we'll see if this ends up being a false breakdown, breakout rather, because that bear pennant we just looked at ended up being a false breakdown, which is usually pretty bad for the bears. The bears having a false something is usually pretty bad, right? Same thing with Disney that happened over here. I think I have them on the daily, actually. I have them on the daily, right? Same with Disney, for instance, as an example, right? Pretty much exactly the situation Tesla's in right now. But, Disney broke out, false breakout, and then, of course, collapsed all the way back down to 85 once again. And it's looking kind of weak right now. Like the RSI is not looking bad, but it's looking kind of weak. And Tesla, again, sitting in a very similar situation here-ish, right? Very similar idea, very similar structure, also breaking out at the pretty much end of this overall descending wedge, right? The tightest part almost, if you will, which is good. This is where you want to see the breakout. Now, the question, of course, is this a false breakout or not? And the thing that makes this confusing is the fact that with such massive earnings reports coming out in literally just 20 minutes, roughly 30 minutes, whatever it is, this can decide this quite a bit, right? Like if Apple misses severely or something bad happens and Apple drops, it's absolutely going to bring Tesla down with it and the market itself, right? Which will, of course, end up just making this a false breakout as well, which would be pretty bad for the bulls. So you want to be very, very careful. So this is one aspect I bring up. Now, the question, of course, is this. Well, okay, let's assume this is a proper breakout, and let's say it is going to play out this pattern. Okay, well, cool. Where do we go, right? What's the potential target? Same concept, Fibonacci, swing high to the swing low right here, right? And then, of course, again, this is assuming that the downtrend isn't done yet. I actually don't think the downtrend is still done. I'm just going to go ahead and throw that out there. I still think we go lower. Again, like I said, it's going to take probably until end of August, maybe September, right? I do think it'll take time. But with that being said, where will this potential bounce even take us, right? Well, the way I look at it is as follows. If you go from here to here, right, you can see the Fibonacci levels, right? We have the 382.5 and then 618. I personally, you want to look at all three. I mean, they're all three targets, right? The 0.382, which is a 269 per share, pretty much is that level that we just could not break above over here, like over and over and over, right? That kind of, 269, 270-ish level, right? With the 21 EMA now sitting around 266, 267, right? That general level, massive resistance. We really just could not break above it, which is, of course, what, constituted this sell-off that we had right here, which ended up being a sell-off of about, a solid 7%, actually, pretty decent sell-off, right? So keep that in mind. So if we do break above that, then I think 275 as high as 280 is absolutely in play. But I still believe that this overall downtrend is not finished just yet. Personally, just my opinion, of course. Could be completely wrong. Like I said, and I say this to my members all the time, and I'll say this in the video as well, nobody knows where the bottom will be. And I want to make that extremely clear. I don't know where the bottom is. You don't know where the bottom is. Nobody knows where this bottom will be. Do we go lower? I still think we do, but how much lower is still the question too, right? So you always want to make sure that you're not just waiting to like time the bottom and tick the bottom and just be like, yeah, I bought the bottom at the very bottom, and you know, you might get lucky and it might work out every now and then, but you know, over like several trades, if you just keep trying to replicate that, you're going to fail substantially more than you succeed. I promise you that, right? So just keep that in mind, right? Of course, we have the 50-day moving average on the daily that we did so far bounce off of pretty successfully, obviously. So that's good to know. But of course, we still have the 21 EMA not too far above us, sitting at 265 now, roughly, right? And we're pretty much getting sandwiched in between them right now. So it's just a matter of which one decides to break, right? Is the 50-day moving average going to be the 21 EMA or vice versa? Are we going to get just smacked down once again by that 21 EMA, right? That's still the question. And I do think that, you know, today's earnings will most likely resolve that, and tomorrow should be, you know, the resolve, if you will, as well. So keep that in mind. That's pretty important to understand as well. But again, I want to make it very clear. I have been buying this dip. I still have more cash to continue buying if we follow even further. Like for instance, I did buy it yesterday on this candle right here, about 100 shares at 253. And again, I'll continue buying. If it keeps falling, no problem with me. All I'm going to be looking at right now is most likely if we come up to 280, I'm going to use that opportunity, maybe even 275. I will look to sell covered calls against my shares, and I'll be very happy to do that, right? If we don't and we fall further, fantastic. I get to buy even, you know, cheaper shares. No problem with me as well. But you want to keep in mind that this situation that we're finding ourselves in with this, you know, double sandwich, or this sandwich of the, you know, 21 EMA and 50-day moving average, and of course massive earnings coming out, very unknown factor. So you just be very, very cautious here. This could go many different ways, right? It's a very difficult situation that we, in my opinion at least, find ourselves in, right? Following by that, if we take away this, we have the 100-day moving average, which is still well below us. Like I said, it is still catching up, and I still wouldn't be surprised if maybe sometime in September we actually do come down to it. That wouldn't shock me. I wouldn't completely like and utterly bet on it. It's nowhere near 100%, but it's absolutely not 0% either, which is why you always want to have these options open. You don't want to just be only positive and only bullish, and or vice versa, only bearish. You want to have some position, at least in some aspect, in both directions, ideally. To me, the bearish direction that I have a position in is essentially just having cash ready to go. That to me is my bearish aspect, right? Or else I just pretty much buy everything I can right now of Tesla at this price, and that's it, right? Just kind of a, you know, psychological perspective as well there. So keep that in mind. The Bollinger Bands, you can see, definitely expanding a little bit, but still overall pretty contracted. Still not too expansive, right? Still overall fairly tight. So keep that in mind as well. If we open up the squeeze indicator, you can see, and there's another green dot. So the squeeze, and it's actually getting a larger line to the bottom. So it's still saying that the squeeze technically should be playing out right now. And it's still saying that it's still technically more room to the downside is absolutely possible. So take that as you will as well. Not looking too hot. The RSI, you know, not looking amazing. I mean, it's not looking atrociously bad. At least on a very shorter time frame over here. I'm just looking right only this specific area. But with that being said, of course, you know, we still have that ultimate bearish divergence where, again, as the stock has been making higher highs and higher lows, even over here as well, you can see we're still making lower lows, lower highs on the RSI. So again, very simple explanation, as we're pretty much doing this with the stock. High, low, high, low. Oh, sorry, higher high, higher low, higher high, higher low. Pretty much the exact opposite is happening right over here, right? For one here, so we set a high, we set a low, then we set a lower high, and now we're setting a lower low again. So literally the opposite, which again, like I said, is an absolute classic bearish divergence. Still playing out. I still think it's going to continue playing out. Again, we'll still have bounces in between. For instance, the one potentially coming up right here that I just talked about, absolutely possible. But with such a bearish divergence still in play and still very, very, you know, obvious in my opinion, I would be surprised if we don't ultimately go lower, at least to 240, if not, again, all the way potentially to around 220-ish, give or take, right? I'd be pretty surprised if it doesn't happen. If it doesn't, fantastic. I still have plenty of shares that I can ride up the momentum with. But if it does, great, I'll be buying that dip as well. Final thing to look at is also going to be the order block in the 65-minute chart. This, of course, shows us, you know, where we have buy and sell orders potentially, you know, waiting and, you know, to be filled and whatnot, right? And of course, right below, so you can see these two massive green kind of, you know, rectangles right here. We have buy orders that pretty much executed right on this bounce that we just had today and yesterday. And of course, we had a more buy orders set up all the way in that 240 range that I've talked about so many times, right? Massive buy order in that 240 range. On the flip side, we still have sell orders blocks set up pretty much right at the level I just talked about, 267 to 270 resistance area that we had so much issues over here. And assuming we somehow push through that, we still have a massive buy sell order all the way up near $300 per share. So take that information and do with it what you will. But yeah, thanks so much for watching, guys. Let me know what you think down below. Massive earnings coming up. It's gonna be a pretty big day. It's gonna be pretty interesting to see how it looks, right? The VIX, of course, finding some life finally, looking pretty powerful now, looking like it wants to finally, get some rallying going, which is, good to see because, makes things a little bit more interesting in my opinion. But with that being said, keep an eye on the VIX, ladies and gentlemen. Very important thing, because again, VIX up usually means market down and vice versa. So either way, thanks for watching. Hope you enjoyed, and I'll see you tomorrow. Peace.